is August 2025, so it's time to do our market update. And we take a look at July numbers, overall market at a glance, the homes sold, average list versus sales price, percent over and under asking, number of days in the markets, the number of price reductions, and the mortgage rates. And as always, Danny pulls all our numbers himself. We're going to go through a quick 1 minute version, and then we'll get into the details on what it all means. So homes sold is the same. Inventory is up a little bit, 30% year over year, but just a little bit over last month, indicating a softening market. Month supply is increasing, very small amount, but still leading to a more balanced market, still trending that way. Average sales price is up, which does not a good indicator of how we're doing in the market as far as buyers or sellers market. It is a positive note for homeowners. Days in the market average is going up, again, softening market. Still a seller's market though. Price reductions are up a bit, both month over month and year over year, and the 30-year mortgage rate is coming down, even though we are up a little bit over this time last year. Overall, this says that we're still in a very strong seller's market. We are softening up. We are not as strong as we were this time last year.
The seasonality of our market, this is the time where we've kind of reached our peak and things start to trail off. That's what we're seeing this month.
Yeah. So
right.
So we have to keep in mind that a lot of these trailing numbers don't necessarily mean a softening of the market, right? Mm-hmm. But some of the year-over-year indicators do. So let's get into the details with home sold.
Right. So as we mentioned, we had 2,362 houses that sold in the month of July. That was actually down 10 houses from the same month in the prior year. So basically 0%. And down just a little bit more than that, just 1% from the prior month, but still comparatively pretty strong. And again, is going to be one of the peak months of this year for us.
Right. This is
also
based.
Yeah, exactly. And also the month supply is 1.62, which again is up just a little bit, but still that's pretty quick.
Yeah. You want to speak to the seasonality of this? This is our peak typically, right?
Yeah, and you can see when you look across the graph, we roll this back 13 months just so you can pick up that trend. Things heat up in the spring and the summer, and then they start to trail off in the fall and really cool off into the winter. So that's what we're seeing here, kind of a replay of what happened last year and the year before, the year before, the year before, the year before. So we fully expect that this month, our sales are going to be close, if not a little bit lower than what we're seeing here. That's what we would bet on.
Yep. What trends seasonally is the average sales price versus average list price. We hit our peak the last couple months, and we're starting to come away from it now, and we're going to continue to trend downwards throughout the rest of the year, we expect.
Well, I think this is a very good indication of that first slide is important because it sets up this slide, which is as demand starts to cool off, we start to see less competition for the available homes. And I think that's what you're seeing here, where you start to see that gap widen between where homes are being listed and where they're ultimately selling. You can see that it was pretty close over the last couple of months as things were pretty competitive. There were a lot of buyers, not a lot of supply. We continue to be undersupplied in the market. But now, again, this is a reflection or an indicator of kind of a lower demand, even though we have that higher supply that's out there. So what we see here is we're 413,000 and change was the average sales price. And while that's down from the previous month, and while there's seasonality, this goes up, this goes down, the thing to keep in mind is we're still up compared to the same month last year, right? You can see that we turned the same corner, but year over year, we're up $13,000, which is a 3% gain. So if you're sitting in your home, you gain 3% in equity year over year, which is always a good thing.
Yeah, and an interesting way to look at this, if we're trying to predict the seller's market versus buyer's market, obviously still a seller's market. All the other indicators show that, but we're not seeing on average the sales price spike above the asking price, which we have seen in previous years, 2 and 3 years ago. And this is the first year I don't think we caught it at all.
Yeah, that's a great point, because 2 years ago, 3 years ago, that orange line fully crossed over the blue line. And actually, if you go all the way back on this chart to April, May of 24, you can see that the average sold price kind of squeaked past the average list price just by a hair. And then the lines kind of crossed back over and widened, right, as things cooled off over the winter. But we got close this year, but never quite, like you said, caught up to that average list price.
It's an overall indicator of a softening market that we're not exceeding our asking price on the regular like we were a couple years ago. That's not necessarily a bad thing. Just keep in mind, it's still a seller's market. If you are going to sell your house, you probably have to find somewhere to go, and that's going to be a little bit easier as this trend continues. We've kind of been expecting this for about a year now, and it's panning out to be true. The next chart, percentage over and under asking. This is a nice little graph of how frequently the price spikes or drops below the asking price.
Yeah, and what we're really trying to do is pay attention to the extremes here, the things on the top and the bottom of these months, because what those represent is, well, I guess I should start with the blue section. The blue section is anything that's sold within 5% of its asking price, right? So 5% above, 5% below. You can see that that's pretty consistent. Month over month, it's about 2/3 or 70% of the homes that are sold. But what trades is the green, which is anything that was more than 5% than asking price, like the percentage of homes sold that were more than 5%, and the orange, which is the percentage of homes that ended up selling more than 5% below their asking price, right? So again, this is a measure, and you can see it's kind of reflects the same pattern as some of the charts that we saw above with the heating up and cooling down of the market. We're getting to a point now where that orange section is starting to creep up a little bit. The green section is starting to recede. And that just simply means that there are more homes that are going 5% below their asking price than they're going 5% above their asking price. So again, this is one more indication that our market is cooling off.
Yeah, this is definitely a seasonal number. If these changes persist or increase dramatically, that'll be an indicator of a softening market. Days of the market's another one of these, seasonally adjusted, but it is getting a little higher than it was this time last year, which we would expect from a softening market. More balanced market, I think we have to keep that in mind. It's not necessarily, it's still a seller's market, okay, but it's starting to balance out a bit. 9 days on the market is the median, 25 days is the average. Dan, you want to break down further?
Yeah, I mean, there's not much else to add, right? I mean, like you said, the pattern is about the same. Things started to pick up around this time last year. You see, we went from 19 days on average to 21. This year, we went from 22 in June to 25 in July. So similar pattern, slightly out of phase, right? So things are a little bit slower this year. But again, in the big scheme of things, pretty quick, pretty fast, but just a notable change from the prior month and the prior year.
Yeah, and then price reductions is another seasonal metric that we expect to go up. This one is going up more than I think we expected, which indicates a balancing market again.
Yeah, and this one was interesting for us over the last couple of months as we did this update, because you can see, again, things came over the peak like they normally do, but the bottom wasn't quite as low as it was in the year before. And it also didn't happen as early, right? Things kind of leveled off there in April, May, June, very consistent and never really broke below that 24% line. Whereas you can see a year ago, they were at only 17%. That was last May. So we never got that low. Things started to pick back up, of course, this month. You can see that last year, we were already on the upswing by the time July got here. So not a huge surprise. And again, we're a little bit higher than we were last year, right? 24% last year this time, 30% this year. Definitely a sign that something's different in the market year over year.
Yeah, and I think that we're seeing that anecdotally in the wild. A lot of price reductions, which is outside of the norm for this time of year. We expected to tick up, just not this much, and there's quite a few nowadays. So final metric that we're watching is mortgage rates. Those have come down a little bit off of the last month or so, and there's been a couple of media outlets that are reporting these are the lowest rates this year. That's not what we're showing on our chart. This goes day to day. reflecting what we pulled today, beginning of August, at 6.63%. You can find lower depending on the programs and lenders that you use. So
Right.
that's
Yeah.
the average 30-year fixed mortgage rate.
Yeah, and I mean, I guess what's interesting here is we started the last couple months showing this chart a couple years back rather than just a 13-month or so. I mean, we're up a little bit over last year, 6.47 this time last year. We're at 6.63 now. 2 years ago, 6.96. But in the big scheme of things, when you back up and look at it over the 2-year time horizon, things aren't that different, right? I mean, and they're not as different as people would like them to be. So we still have a long way to go from a rate point of view. And since things have gotten to that level and activity has slowed down and cooled down kind of like across the whole country, right? And even in our market, there's this, and I wonder if this is one of the things that's happening now. You think about what we just looked at in our market. We're saying the rates are basically the same, but now the average house is 3% more this year than it was last year.
Yep.
Okay, well, if you couldn't really afford last year and you're trying to sock away some more money, but now you have to sock away 3% more, right? I mean, I just think it gets harder and harder for people that are on the margins trying to get in. And I think that might be some of what we're seeing is maybe some people were able to do it over the last couple of years and adjust to the higher rates, maybe save a little more money, maybe buy a house that's maybe cheaper than what they were looking at, or do some other creative things to get in the door, figuratively and literally there. But I just wonder if that's maybe what's causing this to be just a step higher and a step slower than the prior year, is that affordability is different.
Yeah, the rate is pretty close to where it has been the last few years. Like you said, the price is quite a lot more. So overall affordability is down, and that will slow things down a bit. That also helps to balance things out because people are going to have to move given whatever life circumstances. And hopefully we see more inventory. Inventory throttling is the biggest effector of our market for the past several years. And that's just how it's going to be for a while until enough people have to move that the balance changes a bit. So that's the mortgage rates. As always, Danny pulls our own numbers. We don't rely on the regional MLS because that region can be very big, including houses in Cincinnati and Dayton, which are not our market. This is the Central Ohio market. These are bespoke numbers pulled by Danny every month from the zip codes here. And we'll continue to watch the trends. Looks like the market is softening a bit. Danny, thanks as always for pulling the numbers. And we'll let you know if anything major changes between now and then. Until next time.